What's going on? This is David W. Williams, also known as Diamond Dave, the founder of the highest paid part-time job in the world. So let's go ahead and get into Market Mondays. Today is 7/6/2020. And, we're going to give you a really quick overview. The reason why we do Market Mondays is because many of us, we talk about poor and working class black people, don't have people talking about the markets that look like the people in their neighborhood, and they don't talk like the people in their neighborhood. One thing about me is my language, my conversation, my dialect is very much based on where I'm from on this particular planet. And people that are from where I'm from on this particular planet, as soon as they hear me talk, they automatically can lock into where I'm from. Okay? So one of the things is that we have people talking about the markets that don't look anything like the people that resemble the kind of people that we grew up with, the people that we associated with, and therefore we think the markets are not for us, and therefore we lose out on the power of the markets and some of the solutions that the markets can bring to our life. So something that we're endeavoring to do over here at Diamond Dave, highest paid part-time job in the world, one trade away, is we're endeavoring to really talk about the markets and make this part of the basic conversation, right, that we have on a regular basis, the same way we talk about sports, relationships, sex. A lot of the stuff that doesn't really benefit us long term is because of what our conversation is over. So let's go ahead and get into it. Let's not be long-winded about that. So today is Monday, 7/6/2020. The market closed green. The market really had a really good day today because of a lot of the market is positive because we're mentally trying to get past COVID. And I think the market believes that if we just think positively, we can get past COVID. So the Dow Jones average gained around 459 points. It was up around 1.8. It ended around 26,000. The S&P 500 was up around 1.6. It ended around 3,000, right? And it had 5 straight sessions of gains. That's its longest streak since December 17th. The NASDAQ was up around 2.21%, around 2.2% once we round that off. And let's say ended around 10,000. So we saw that the market was positive, even though we're still seeing a high infection rate of COVID, right? Across a lot of different states. And what we're seeing is that I'm down here in Florida. A lot of the states are just acting as if COVID is not even something that is even an issue anymore. And one of the reasons why they're doing that is because they really have made a decision of, and this is my personal opinion, they've made a decision that the economy of this particular states is more important than trying to shelter people in or quarantine people from exposure to COVID. I think they're going to kind of make it like a personal decision. You have the choice, and you have the ability to protect yourself. And if you choose to, you do. And if you choose not to, you don't. And it is what it is. And I kind of think that's the mentality that they're taking. So we could see a scare in the market in the future, right? Because of new infections. How right now, mentally, people are just walking over it, right? That's just my personal opinion. I believe that COVID is very much real. It's a disease. It's not about buying into the hype of the media, but it's very much real from an exposure standpoint, unless for populations that are more at risk. And I live in the state of Florida. We have a lot of elderly people. And from my understanding, they're going to be more at risk for this particular type of infection than maybe a younger, healthier person. Now, what we're also seeing is that some experts are calling for more economic stimulus to consumers. However, that's still up in the air because they believe that because of the loss of jobs, people, I was talking to somebody earlier today, they were telling me that a member of their family probably will get laid off in the future before the beginning of the year. Those type of layoffs, right, that are future dated because of COVID will start to hurt the economy because these people are not going to have any income coming in. So a lot of experts are calling for another stimulus, but we're seeing is that the government and the institutions may be hesitant to provide another stimulus to workers because the way this system works, and the only way it maintains the status quo is if workers are out working. So they don't want to do is give you so much money that you sit in the house, right? So they're trying to figure out a way to incentivize you to go out and continue to work, which is what don't give you any more money. So now you got to go leave the house to go make you some money. Now let's go into the jump outs. And so what we talk about in the jump outs is that particular companies that have jumped out today, they may have exceeded the norm as far as their performance, and we're going to kind of talk about them and give some context. And these are some things that you can go off on your own and look at to decide whether they're going to be good place for options, or also whether they're going to be good place for buy and hold. So Facebook was up around 6% today. 6% today. It closed around 240, right? Now, I want you to understand something, and we're going to go into this a little bit. Last week, people were saying that Facebook failed because that advertisers were pulling out. So Facebook, after a partnership, was around 240. The news came out about advertisers. It dropped. If you look at their historical price action, over the past, I want to say 2 to 3 weeks, they hit a support of around 216, right? And when I say support, I mean they hit a floor, right? Where the particular share price dropped from around 240, started to gradually fall to hit around 216, right? Hit 216, and then what we're seeing is that over the past few days, it started to move back up. So right now it closed at 240. Now it was around 240 when it started to drop. You had a lot of news and a lot of activity around, well, Facebook is going to have a bad quarter. Share value is going to fall. They're going to lose value because the advertisers have pulled out. Well, what we're seeing now is essentially they've what we call retraced back to where they were before all this news came out about advertisers pulling out. So we start to understand is that the market believes that Facebook's value is 240 with or without those advertisers. So even though those advertisers have pulled out, the market still believes their value is 240. So as a trader or as a buy and hold person, you still have to look into that and try to kind of understand your analysis of that. I'm not an investment advisor. I don't advise people on how to invest their money. I don't have a Series 7. This particular presentation is for entertainment and educational purposes. It's not investment advice. However, in my own personal opinion, Facebook's real value is around probably 225 to 227. I see that really getting over that price point if they open up WhatsApp to advertising. Facebook is one of the companies that I study on a regular basis. I bought literally tens, if not almost $100,000 worth of Facebook media, probably over the past year. And so I'm very intimate and have a really good understanding of their business model. And to me, because they are essentially an advertising platform, the only way for them to make money is to sell more ads. I don't understand how they make more money doing anything else. That's just my personal opinion. Amazon was up today around 4%, closed around 3K, and now they have about $1.5 trillion valuation, right? So Amazon's been running the past few days, right? I'm an options trader. I can't even get in. They've been running so hard, I can't afford any of their options, right? It's been, that market is in such a frenzy over there. The premiums are just sky high. They're getting close to earnings. I believe they report earnings this month. I wonder what it's going to look like for earnings the way it's running. So they're around 3K. They low key might hit 3.5 to 4K before they hit earnings. If they blow up earnings, they may hit 4K immediately after earnings. So they're really running now because of this COVID situation. They're doing a ridiculous amount of business and everybody knows it. And so what they're looking to do is to get in now as opposed to get in later and having to pay a higher price point. So there's a massive amount of frenzy around that particular market. Now we want to talk about Tesla. Tesla is a company right now that's doing massive numbers because of momentum. They're around 13% today and they close around 1371, right? In the aftermarket, when I was putting together this particular presentation, I want to say about an hour and a half ago, they were trading around 1400. So the market is extremely bullish on Tesla and nobody really knows where it's going to stop. I believe it will stop. I'm looking for a pullback, but I also believe it's just as likely it could hit 1500 before this week is out. There's that much optimism and frenzy around that particular market because what's going to happen is fear of missing out. A lot of people didn't get in early. They're going to get in late. And then because they're going to get in late, they're going to have to pay a price, but they're going to be willing to pay the price because they think it's going to keep going up. The challenge is that when it stops going up, it's going to fall real hard because people are buying in now because what? They believe it's going to keep going up. If it doesn't go up, they'll be willing to take an early loss as opposed to take a loss a lot later. So I'm going to really observe Tesla because I want to try to figure out, is it going to be a good opportunity for me to do what I want to do when it falls? Okay. Now we're going to go into a particular topic in which we're going to talk about something that's market related and a discussion that's going to allow you to have a better understanding about the market. And we're going to talk about buy orders at lower prices. And so we're going to use Facebook as an example. So Facebook was around, let's say 237, 240 when a lot of the news started coming out that they were losing advertisers. As a result, Facebook started selling off. Now, we were talking about somebody earlier today. I was having a conversation with somebody about the market. We're talking about support and resistance. and I was getting them to understand is that when you have a support, a lot of times the support is created because when you have a lot of times a big cap company, they have a lot of institutional buy-in. They, under normal circumstances, are not going to let that share price fall because they're heavily invested in it. So they're not going to let the bottom fall out. Now, you got certain situations, COVID-19, the mortgage crisis, maybe a big type of scandal dealing with that particular company in which they decided, you know what, we're going to pull out of this company. And you'll see that with lot size of shares. So you may see a large amount of shares hit the market for sale at a relatively short amount of time is because they're pulling out. And if you have access to that particular type of information, then you know what that means. But what you see a lot of times is that you'll see a sell-off, they'll hit a support, and then it'll bounce back up. Well, why did it bounce back up? Because this is what the large institutional buyers do. A lot of times the sell-off is started by them. What they do is they sell off. They look to sell, right? And as they look to sell at a price that may be under the current share price, it'll start creating a lot of downward momentum on the stock. So then what happens is the share price starts to fall. But what a lot of people don't understand is that they already have buy orders at lower prices. So let's say hypothetically, we're looking at a company that's $100, right? They institute buys orders at, let's say, 97, 98. That creates a lot of downward momentum on those particular shares, right? So the shares start to fall. So what happens? A lot of other people follow them in selling off because they want to get out, because their attitude is we're losing value. So they want to get out of their position. So they follow the big institutional companies in selling off. So they may sell off at 95, 96. Share price keeps going down. Then what happens is the big institutional buyers, they have buy orders, let's say at 90, 91. So as that share price goes down, right, they come in at 90, 91 and they start buying up all the shares that was sold between 97, 98 and 91. That's where you're going to get the support. And then what do you see happen? It starts to bounce back up because everybody else is waiting for the buy signal. They're waiting. They're looking at candlesticks. They're looking at technical analysis. But the big institutional buyers, they already know what they're going to do. Why? Because it was a plan from the start. Their plan from the start was to initiate the sell-off, get other people to follow them. As that particular price starts to fall off, they come in at a lower price point. They buy up all those free shares, right? And then what happens is it rides back up because of that momentum. And they do this on a regular basis. What made the situation with COVID-19 very interesting is as cruise lines and airlines started to fall, all the buy orders have been eliminated. So if you look at a lot of times, if you look at the charts of a lot of these companies around February to March, what do you see? It just consistently falling. You don't see any spikes back up. But normally, if you look at Facebook, over the past 3 weeks, you saw a buy off. They hit around 215, 216. It started to come back up. Why? Because that's where the buy orders was at. The buy orders was at 215, 216. So when you're buying puts, you can't anticipate. This is what I was talking about earlier about buying as close to strike as possible, because you really can't anticipate a large amount of share volume leaving that, a large amount of share price leaving that particular market. Right? Because the only reason Facebook fell in March was because of COVID, even though that didn't make sense because Facebook isn't affected by COVID-19. But a lot of people put in their brain that it's going to affect advertisers. Facebook went down around to about 167, maybe 140, and then it walked its way back up. So now it's at 240, right? So it's at a higher price than what it was before the COVID-19 sell-off. But you have to always understand is that these big institutional firms, they can initiate the sell-off themselves. They're in control of that many shares. They can do what we call slow floated. They can hit the market with so many shares very consistently, but not enough to cause an alarm where they can start making the price start to go down. And what happened is a lot of people will follow them because they didn't buy it because they're not, most of these firms are not buy and hold. They're on a 90-day cycle to show a positive return on their particular portfolio. So when they see that this particular situation is starting to move negative, they have a certain amount of shares that they're willing to sell to get out of their position. So when you're looking at a particular ticker, when you're looking at support and resistance, always be observant of when this thing started to sell off, especially over a particular amount of time, not talking about maybe a day, I'm talking about over the course of a few days, even a week, where did it hit and where did it bounce back up? Because that's where the buy orders were at. And that's why if a company is in a 2 or 3 day sell-off, it's rare that they're going to be in a 7 or 10 day or 14 day sell-off. COVID was an abnormal situation where companies were selling off 5, 6, 7, 8, 9, 10 days in a row. That was very abnormal. You had companies at a $75 share price, and once they started selling off because of COVID, they went down to $8 or $9. That's very abnormal. Normally what you're going to see is a certain amount of days of a sell-off. You're going to see those buy orders at lower price points. They're going to go back in, because even with Facebook losing advertisers, Facebook is still Facebook. The fundamentals are still there. The market is still there. Their brand recognition is still there. So yes, they may lose some advertisers for 30, 60 days, but it's not as if they're a null and void platform anymore. That's with any company. That's with Amazon. That's with any company that has shown sustainability over time. You may see a small buy off, right? But what you're going to see is that because of buy orders at lower price points, that thing normally over time will start to walk itself back up. So wanted to give out this Market Mondays. What's going on, Katrina? What's going on, Renee? If you know somebody that can get value from this, please share it out. It'll help me. It also will help them. If you have any questions or comments, hit me up in the comments. And if you know somebody else that can get value, share it out. This is David W. Williams, also known as Diamond Dave, and I'll talk to you later.